Well, it's official. It looks like the IRS is back in the news. If you remember last year, the IRS was in the news quite a bit. But in 2020, it was all about when people are going to get their stimulus checks and if they were delayed. But now in September of 2021, the IRS is back in the news, and this time it has everything to do with banking. According to multiple news outlets, banks and credit unions will now have to report to the IRS when a transaction exceeds $600. This all comes after the Biden administration released the American Family Plan. And it looks like banks and credit unions and some Americans are up in arms about the new rule change. But we are here to set the record straight. What is this new IRS banking rule, and why is everybody so upset about it? Well, we'll be discussing all of that and more in today's Business and Financial Breakdown, so make sure to stick around till the very end to learn everything you need to know about this new IRS tax rule. But before I break it all down, I need you to do me a quick favor and smash that thumbs up button below and hit that little notification bell too. That way YouTube can show our videos to way more money minds around the world, and we can keep making videos just like this one. Thanks. The IRS. Just saying those three letters makes some people feel a certain type of way. In case you don't know, the IRS is the Internal Revenue Service of the United States. Essentially, its job is to enforce all of the tax laws that are decided by Congress. The IRS was created all the way back in 1862 as a way for the Union to help pay for rising expenses that were caused by the Civil War. But Americans were paying taxes long before the IRS was established. Americans wanted an appointed representative who would keep their ideas in mind when deciding the tax code. And as you can probably guess, there was not much of a tax code, at least in the beginning. Taxes were basically whatever they needed to be in order to fund the US. But that all changed when the IRS was formed. Now there was an actual body to look after the tax code in the US and make sure everything made sense. And remember, the reason we have taxes in the first place is because the US is a non-profit entity. Meaning the only way that the US government can get money is by taxing its citizens. And pretty much everything in our day-to-day life is taxed. From your job, to what you sell, to what you buy, to what you even own. All of that is taxed. These taxes fund all of the government programs that you see today. But the IRS does not actually decide what the tax code will be. No, the tax code is decided by Congress, as they actually get to decide what becomes law. The IRS basically just enforces the tax code and makes sure that all of it makes sense and that it's functioning properly. And there are a lot of weird things about the tax code, and each individual state is going to have its own tax code. But the bottom line here is that taxes involve money, and the government wants to make sure that any transaction of money happen legally. So let's break down what exactly is going on with this new IRS rule and why everybody's so up in arms about it. In April of this year, President Joe Biden proposed his American Families Plan. This plan is supposed to help expand Americans' access to childcare and education. In addition, it aims to increase the number of women in the workforce. But whenever the government proposes something, they have to pay for it. So that will come from taxes. So in order to help pay for this new proposal, and I'm just reading off my laptop here, this plan would need to create a comprehensive financial account information reporting office. Financial institutions would report data on financial accounts and information in return. So essentially, financial institutions will have to report to the IRS if a certain amount of money is withdrawn or deposited into a bank account. And in this case, the number is $600. Oh, what exactly does that mean? Well, that means when this proposal takes place, which is currently set to be on December 31st, 2022, the IRS will have information on any cash flow transactions that exceed $600. To break that down even further, if you deposit or take out over $600 from your bank account, the IRS has to know about it. And people are up in arms because they're saying that this is a huge invasion of privacy. But the important thing to note here is what the banks will actually have to report to the IRS. It is true that when the proposal states that any cash flow exchange above $600 needs to be reported to the IRS. But right now, that is all that needs to be reported, meaning that they do not report actual individual transactions and they don't give the IRS any of your personal information. Essentially, all that means is banks will just need to give the IRS a running list of how many times $600 went into accounts and went out of accounts. They will not be showing the accounts or what actually happened with those accounts. They'll just be basically showing the number of times that it happened. The IRS can basically take this information and monitor it for suspicious activity. And if there is any suspicious activity, then the bank can then audit a specific account to get more information. And the IRS is doing this so that people can no longer evade taxes. Basically, the IRS is trying to make sure they know exactly where money is coming in and out from so that they can make sure people are paying their fair share of taxes. Because it looks like a lot of people are using this tax loophole to move money around and the IRS can't track it. But people are still very upset by the new move. move. They're basically saying that it's none of the IRS's business to see where they're moving their money to. And many Americans are saying this will create a major transparency problem. But the IRS is saying that this new rule would only be used to monitor bank accounts and has nothing to do with you, your job, or how much you earn. Banks' jobs are just to report how many times over $600 went in and out of accounts, and that's it. And its only job is to monitor suspicious funds that may enter or exit your account. This wouldn't go off of any other money because the IRS already tracks your income every year with W-2s. So if things don't line up, they'll want to know why so that way you can pay the appropriate taxes. This new proposal could raise $460 billion in order to fund the American Families Plan. And right now it looks like this new IRS rule is aimed at businesses and individual accounts. And just to be clear, taxes and plans like these are very tricky. And as always, don't just take my word for it. Make sure to always consult with a tax professional before making any moves with your money. But now I want to hear from you. Do you think this new IRS rule is a complete invasion of privacy? Or do you think it's totally fair and reasonable and honestly won't change much? Be sure to join the conversation below before you go. But that is it for today's Business and Financial Breakdown. Thank you so much for watching, and I'll see you all in the next one.